Hi everyone, and welcome to the first of our financial market updates. I'm Piers Bolger, the Chief Investment Officer for Viridian Financial Group. Each of these market updates we're going to be focusing on one key data point that we'll look to share with you in how we're thinking about financial markets and how that then translates into the decisions that we make, both in terms of our asset allocation framework and ultimately in the portfolios that we recommend to you as clients. For this month, we're going to be focusing on the rising strength of the US dollar and the implications of the proposed tariff policy, what that has on corporate earnings and how that may impact in terms of the direction of financial markets as we head into the back half of 2018 into 2019. The appreciation of the US dollar in isolation really is to be expected. We've seen the US economy grow the strongest of all major global economies, highlighted by the increase 4% GDP through the second quarter of 2018, multi-year unemployment, moderate wage growth, a benign inflationary environment supported by accommodative monetary policy. All of this has led to very strong corporate earnings, which has fed through into the S&P 500, which is up 14% over the last 12 months. In global terms, MSCI World is up close to 21% in Australian dollars. So the positive impact of a strong US economy has really fed through into financial markets. More recently though, we've seen a change in the policy framework coming out of the US administration. Principally, the potential imposition of tariffs and tariff policy has really led to a sharp appreciation in the US dollar. As you can see on the chart behind me, the US dollar has appreciated roughly around about 9% against the Chinese renminbi, and on a trade-weighted basis, close to 8% since the beginning of the year. In our view, the speed of this rise has a potential to cause a damaging impact on financial markets and principally around the outlook for corporate earnings as we head into the back end of 2018 into the early part of 2019. When we're thinking about the impact of a rising US dollar from a portfolio standpoint, there's two key takeaways that we're focusing on at the moment. Firstly, how are we seeing the earnings environment, both globally and the impact that that would have on domestic companies that operate in a global market. And secondly, the implications for the Australian dollar and what that then means when thinking about portfolio positioning, principally the extent to which you have unhedged or hedged strategies within your overall asset allocation framework. So when talking to your advisor regarding your individual strategy, these are some of the key elements that he or she will be thinking about and discussing with you in regards to establishing the right asset allocation and portfolio for you depending upon the nature of this particular environment.